Coming up next, we have a panel talking about the venture capital aspect of industrial control systems. As Philip just talked about innovation, I think that is a perfect segue to where Dale Peterson is going to be leading the panel on that discussion with Bob Ackerman and Samir Reddy.
Great. Thanks, Bryson. So we're here to talk about venture investing in ICS security companies, and my name is Dale Peterson. I'm with Digital Bond and S4 Events. I've been involved in helping secure asset owners in all different sectors secure their industrial control systems, and over the last 5 years I've done a lot of analysis of the market and put out a lot of content on it. But I haven't put my own money in the market except for in my own company. But with me are two gentlemen that represent venture capital firms that invest in ICS security startups. So as a way of starting, why don't we begin by letting our two panelists introduce themselves. Bob Ackerman is a general partner with Allegis Cyber Capital. And Bob, why don't you start out by introducing yourself and talk about the types of ICS security companies you're looking at for potential funding, and maybe disclose any investments you currently have.
You bet. So I appreciate it, Dale. So, short personal story, background is computer science, built a couple of companies in Silicon Valley as a CEO founder, and then sort of the classic entrepreneurial response to venture capital led me to start a venture capital firm a little over 20 years ago. So, as an operator, I had the pleasure of being backed by both Sequoia and NEA, so good venture firms, but felt that venture had lost a lot of its operating roots. And the classic entrepreneurial response was, I'll start my own damn venture firm and show you guys how to do it. So that's how I got here. I'm the founder of Allegis Cyber Capital, or a 20-plus-year-old venture firm that's been investing in cybersecurity for 20 years. We shifted our investment focus to 100% cyber a little over 6 years ago, raised the world's first dedicated cybersecurity venture fund about a little over 4 years ago. We're now on our second fund, and our platform is backed principally by JP Morgan Chase. I wear a second hat as the co-founder of Data Tribe, which many people in the DC area will be familiar with. Data Tribe is what we describe as a foundry based in Fulton that looks to transition national intelligence, cybersecurity expertise, and data science expertise out of the Gov Intel community and apply it towards building cutting edge solutions on the side of defense. And so we've been successful with that program. So that's our startup vehicle, and then the Allegis platform really is early stage venture. We actually have a third element of our platform that's coming online as we speak, which is our growth equity platform called Night Dragon. Night Dragon is led by my partner Dave DeWalt, who was the founder of the CEO of FireEye, the CEO of McAfee. So when you look at our platform across the board, we are stage agnostic. We have global reach, global capability. Our capitalization at the end of the year is probably about $1 billion. All of that focused on cybersecurity and data science. So that's kind of what we do. Most relevant to our conversation today in our portfolio is Dragos. So Dragos actually began life at Data Tribe, and then when it was time for the Series A financing, it gave Samir and I a chance to work together, and we'll talk more about that as we go forward. But at a high level, that's who we are. So it's all cyber all the time, stage agnostic, global reach. Our objective is to create a platform, frankly, that can engage with the best companies at any stage of development anywhere in the world, and leverage our operating backgrounds and our global network of relationships and resources to support their growth.
Great, thanks, Bob. Samir Reddy is a partner with Energy Impact Partners. Samir, same thing. Why don't you introduce yourself, talk about the types of companies that Energy Impact Partners invests in, and disclose any investments you have in the area.
Sure. Thanks, Dale, and good to be on this panel. Appreciate everyone having me. So Samir Reddy, started my career at GE Ventures. So really that was kind of in the sort of clean tech 1.0. That's sort of a term that nobody uses in the venture community anymore, but it's really called sort of industrial tech, energy tech, back in 2007 to 2010. a lot of lessons learned came out of that. I think one of the foundational lessons learned at that time is really any innovation that you want to do in this sector, and particularly when you're working with utilities, you need to bring the utilities to the table. And I've spent the last 15 years of my career working with utilities in various capacities. But really, when we started EIP 5 years ago, I think that was the central learning. If you want to really make a dent in this sector, you have to get the utilities to the table, but you also have to get the startups to the table, and you have to find a way for them to work together. So that was the core thesis behind EIP when we started the fund 5 years ago, is let's raise money from the best of the best from a utility perspective. So we brought in Southern Company, Xcel Energy, National Grid, et cetera. And really, let's make investments across 5 major sectors that are core to this next degree of an energy transition that we're going to see over the next 15, 20 years, which is cybersecurity is going to be instrumental in that. Digital infrastructure is going to be another big component of that. Transportation is another big component. Smart cities and the smart home, and then the electrification of transportation. So as an investment firm more broadly, that's what we focus on. I lead all of our security investments within EIP. And to date, Dragos was sort of our first investment in the industrial security space. I was grateful for Bob to introduce me to Dragos and Rob initially when that was about 3 years ago when they were in their infancy, and great to see the progress they've made. Since then, we've made a couple of new investments. So Finite State, which is really focused on the product security side of the fence, and doing some really cool work with the DOE and CSER as it relates to NERC-CIP and this new executive order. And then, from a new investment perspective, Dale, I'm sure in this conversation we're going to talk about some interesting new categories within ICS security as well. So we'll save that for the discussion.
Okay, thanks both of you. And Samir, just maybe nail home a little bit, because on this panel, I wanted to have two different. I mean, you both have invested in the same company, so you can come to the same investment. But we've seen with Energy Impact Partners, we've seen with Chevron, Shell, other like Shell Ventures and such, where large asset owners in a sector get together and they almost have two. It seems like they have two missions for the venture fund. It's to help fund the technologies that the sector will need from just a business standpoint. For example, Shell is going to need this type of technology, or thinks they may need this type of technology. And the other thing is to make money doing that. So I think that's why I wanted to have both the panelists on board. Why don't we start, just knock out the COVID issue at the beginning, since we're all here virtually because of COVID. Bob, what kind of impact is COVID having on the funding of ICS security companies, or let's say technology companies in general?
Well, I think it's nobody knew what would what the impact would be. I think we entered into COVID with kind of conservative bias. Let's wait and see. And wait and see had a number of different dimensions to it. How is it going to affect our companies? Our budget's going to dry up, or is their sales momentum going to slow? That was one aspect of it. And whenever you have one of these sort of significant disruptive periods in the venture ecosystem, venture capitalist tends to bias towards being conservative. Protect the existing portfolio. Let's wait and see. Let's not do anything new until we know that the current portfolio is squared away. So I've been through, this is the third time I've been through something like this. We've got a pretty good playbook, and the net, as it relates to existing portfolio companies for us, was no impact. Because our portfolio is 100% cybersecurity. Turns out cybersecurity is uncorrelated, is very resilient. Budgets moved around a little bit of budget reallocated towards virtualization. But our companies are all at plan or ahead of plan this year in a COVID environment. So once you get comfort that your companies are okay and that they're not going to be disrupted in a significant way, you then begin to say, okay, now how do we take advantage of perhaps the environment to look at new opportunities? And so we have been very actively looking at new opportunities. Frankly, the bulk of those opportunities we've been looking at are things that were already on our radar, where we already had some familiarity with the management team and we had started in a process. We're now working through the end of that pipeline for new investment opportunities. And the next challenge we're going to face is, how do we look at new investments where we can't meet the team, or we haven't met the team face to face? We can't spend the quality time with the team that we normally would. And frankly, we're still working our way through that. What that means for us is it slows the pace of investing a little bit as you try and find other ways to kind of build that relationship. So at a macro level, that's kind of where I see venture today. It's a pattern that's repeated itself, in the early 2000s and again in 2007 to 2009. Nothing really unusual about that. As it relates to ICS, there's a set of dynamics around the ICS market that I know we're going to talk about. And I don't want to say that it has. I don't think COVID has really affected ICS startup funding per se. I think there are broader and deeper issues related to ICS funding that have very little to do with COVID and have a lot more to do with the venture community, its biases, and its perspective on industrial control systems and the industrial market in general.
Okay. And Samir, I'll give you a chance. Did you have anything to add to that? Any
Sure.
different take on that?
Yeah, no, I think Bob hit it from a generalist perspective. Obviously, March and April, nobody was investing, and for any security or any startup period, that was a very difficult time if you're out in the market fundraising. Since then, as Bob mentioned, public markets and security, they're trading at all-time highs right now, and the private markets tend to follow the public markets with a bit of a lag. I think within ICS, we have to look at what are the fundamental drivers pre-COVID, and has any of that changed? Has any of the regulatory scrutiny or pressure that these companies are facing changed? Has the attack surface changed at all? If anything, many of these industries are only digitizing further and expanding their attack surface further. Have budgets changed? At least within the utility sector, it's a pretty defensive sector, and they tend to get recovery from customers from a rate perspective. So budgets have been pretty sticky and stable as well. So I think all of the key macro drivers that existed pre-COVID are still true now in this new reality. I think the one thing that we've started to see a little bit is if you're deploying an on-prem solution, obviously you have to be creative with how you think about customer deployment. So I think that's been kind of one thing that some companies who have an on-prem solution have to work through. But I think from a funding perspective, yeah, let's separate. Bob made a good point. Let's separate kind of the systemic funding challenges and nuances of the ICS market versus kind of some of the tailwinds or headwinds that they're facing in COVID. So I think net long-term secular trends are all still positive for the ICS sector as a whole. But I think there's going to be some nuance in that over the next 6 to 12 months with specific companies.
Yeah, I think it's an interesting short-term issue that we're seeing. It's almost like a donut hole. We had a case where people had a lot of business booked in the first quarter and they delivered it in the second quarter. So they didn't see that much of an impact on their revenue numbers, but then not a lot of people bought March, April, May, June. And so now there's a little shortage of delivering, but things seem to be picking back up again. But I think you're right. The way to look at, I'm sure you guys look at it long term. You don't worry about 6 months unless you have a company running out of cash or something like that. Samir, let's actually dive into this. So we've had a lot of activity in the ICS security venture funding area over the last 5 years. From about 2016 to 2019, 25 or so companies raised money, most of them in the detection space. And raising, I think the highest was $100 million. I think Clarity has raised the most money, but quite a few raising 5, 10 million, and a smaller number raising around 50 million. And then in the late years, 2018, 2019, we had some of our first exits. So Forescout bought Security Matters for 113 million. Cisco bought Centrio for a number we don't know. Tenable bought Indige for 78 million, and the last one was Microsoft bought CyberX for, I like to say, an unknown amount. One person said it was 165 million, and that's become fact. But it was just one reporter in Israel said it was 165 million. That seemed a little high to me. But if you're looking at these companies going out at between 50 and let's say 150 million, that's probably a single in the venture world, especially if they raised at least half of that in venture. Does that affect how you look at this space at all? The fact that some of the early exits haven't really been what, let's say, a VC company would be looking for an exit, or are you still optimistic about some home runs in this space?
Yeah, no, it's a good question. I think so. If we take a step back, when we invested in Dragos 3 years ago, I think we saw, and probably what Bob saw as well, there's a very long tail of ICS security solutions out there. You had something like 15 to 20 different vendors, and Dale, you do a great job of tracking this, but yeah, I think a shakeout in this market had to happen. So I think everybody was expecting that. And I think the reason 15 to 20 companies got funded in the sector is because everyone sort of sees the same thing. I mean, it's a huge market. I mean, it's very rare in security that you get a pure greenfield market with no incumbent. And when people talk about ICS, I think there's some disagreement over kind of like I think some traditional VCs view ICS as a niche market. And I think when you actually unpack it, ICS is effectively everything in the built world. So it's oil and gas, it's manufacturing, it's utilities, it's real estate, building control systems. So it's a really compelling market. So I could see why at the Series A stage, and you saw a lot of Series A and Series B companies get funded on just that belief that there's a big market, and they were willing to take the execution risk. I think since then, what we've seen is there's been a set of tier 1 vendors that have quickly kind of risen to the top, and there's been sort of tier 2 and tier 3 vendors that have distanced from the pack, and I think that's where we've seen M&A in tier 2 and tier 3. So I don't know if I draw a correlation to those tier 2 and tier 3 players exiting in the multiples that they were selling at to the exit potential that these tier 1 vendors have. I still think that there are going to be a handful, 1 to 2 or 3 even public companies built out of this category. I think it's a big enough sector, and I think it's a big enough sector where there could be multiple winners. So we're pretty bullish on that. I also think from a market dynamics perspective, I think the buyers of those companies were all sort of approaching this in different ways. I think Cisco and Microsoft, I'm guessing those were more ecosystem plays to strengthen their existing ecosystem. Tenable, Forescout, probably feature enrichment to an extent. But within the OT sector specifically, I think there's a lot of value in having an independent player. I think if you think about independence that OSI up until recently OSI Soft has benefited from prior to their sale from Schneider, I think there's a lot of public-private partnership in this sector, and I think there's a lot of value and strength in building that independent player. So that's what I'm excited about. That's sort of what gets me out of bed, and that's sort of why we made the investment that we did in Dragos 3 years ago.
Well, Bob, why don't you answer that same question? Are there home runs out there? But also, Samir brings up an interesting point. The people that have acquired ICS companies to date have not been, they've been more generic companies, either like Tenable, a generic security company, or Microsoft, a cloud service provider, Cisco, and network infrastructure provider. So two-part question, are there any home runs out there in the ICS security space? And secondly, will there be a winner that will remain just an ICS security company? Is that a large enough segment?
Yeah, I mean, and again, it's first of all, let me echo Samir's observations. A couple different points here. When we talk about 20 to 25 companies being funded in the ICS space, and isn't that a lot of activity? I will tell you, it's not a lot of activity. Vis-a-vis the size of the market opportunity, the VC community has shied away from industrial. And the VC community has a track record and a history of being very reticent to jump into industrial. The reputation is it's a large market, which makes it very attractive, slow moving, dominated by entrenched technology suppliers, none of which are innovative. It's just a set of dynamics that make it very difficult for a young, disruptive, venture-backed company to carve a toehold in a market that's reasonable. So the venture community historically has shied away from the industrial sector. And I've done a number of industrial companies over the years, and I've run at that windmill quite a few times. Our hypothesis was security was going to change that people would wake up, they would understand the security threats to that critical infrastructure, and the historic pace of innovation would no longer be acceptable, that security would change that dynamic. And I think that we have seen that, but we're still dealing with that venture capital industry legacy of not really sure about industrial. I can tell you of the early days when we were starting up Dragos, and we're talking to the venture community. People go, that's a rock star team. They come from the right place. They've got great domain expertise. The market's huge, but man, it's industrial. And industrial that's a whole different beast. So I think you look at 20 to 25 startups, and I frankly, given the size of the market opportunity, I would have expected more activity. Now, given where we're invested between Samir and myself, I'm okay with the fact that the VC community has not flooded the field with a string of undifferentiated offerings that complicate the market dynamics. But it's just, industrial is just different. And it's an area that the venture community doesn't really understand. If you look at the culture of industrial, it's radically different from IT. OT engineering, OT culture, OT technology, very different from IT. Again, it's an area where the venture community doesn't have a lot of experience, and it tends to shy away from things where it doesn't have a lot of experience, or there isn't a history of success. Makes it nervous and apprehension. Now, as we see some of the companies that are out there today gaining momentum, what you'll see is a pickup in venture activity, what I call the fast followers, will begin to flood in. The other dynamic you have in industrial is you don't have a history of industrial startup innovation to draw startup founders from, just because it's a byproduct of the venture community not having invested heavily in industrial in the past. So there's fewer people that are qualified to jump into industrial as startup entrepreneurs. So you got a whole really interesting set of dynamics that are at odds with the overall size of the marketplace. So it's a different way of looking at this market. Specifically to your question, Dale, we're going to build some damn big companies in this sector. This is one of the largest market opportunities out there for innovation today. There are, to Samir's point, there are no entrenched, established, dominant security players, so it's wide open, to build those players, and we're going to see that happen. I would absolutely agree with Samir's characterization that the M&A activity we've seen today is indicative of sort of those tertiary players, looking for a place to go and being swept up by some of the aspirants that wander into the marketplace. When you think about the landscape for industrial from a security perspective, the acquisitions today have been sort of traditional players or traditional security players that see that greenfield opportunity and looking for a toehold to expand into the OT market. That's where we've seen the activity. And a lot of it's been around asset discovery and some of the more low-hanging fruit, important fruit, but 5% of the overall solution at the end of the day. We haven't seen the big industrial players really make a move yet. I expect at some point in time they will make a move. There's going to be some challenges that maybe we'll talk about today as they try and enter into the space from a valuation perspective. But look, I think it's one of the most exciting opportunities out there. Not often do you get a market that is the size of the industrial space is measured in trillions of dollars, where security is absolutely essential. It rides on the back of the global digitization. It's exposed, and it needs to be secured. That is a big, big, big opportunity. So, I'm obviously very bullish. We continue to actively look for new opportunities in the industrial space. I think we've got a great one in our portfolio right now that is going to do some absolutely amazing things in the marketplace. But I think this market's going to be more consolidated than some of the other areas of information technology security. I think there are going to be a few big players. There's not going to be a whole lot of big players. There are going to be a few big players.
Okay, Samir, just one quick follow-up on that, and then we're going to shift over to government. And by the way, people, if you have questions that you want to ask Samir and Bob, you can put those in. If you see me glancing over, I'm checking the panel to see if there's any questions coming in. But Samir, now you've got electric utilities as your funding source primarily. You mentioned Southern, and I think there's 5 or 6 TEPCO, a few others. Yeah. When someone like Microsoft buys CyberX, my analysis of that is Microsoft has very little interest in selling an appliance into an electric utility or anywhere else. So they bought them for Azure, for the technology in the cloud, and I'm sure that's going to be of some benefit to the electric utilities, but that essentially kills the primary offering that was funded. So from let's say they got a much better price, let's say they got a great price. How do you deal with the fact that with your funding source that an acquisition might make sense financially, but not make sense for, let's say, a sector that you care about? How do you deal with that conflict?
Yeah, no, look, it's a good point. So we represent just one shareholder out of many in most of the companies that we invest in. But from an EIP perspective, I think there, as you mentioned previously, there's sort of dual purpose for any investment we make. So before we make an investment, we bring it to our utilities. We want to make sure there's buy-in from the utilities that this is a product that they actually find value in. From a technical perspective, in security, for example, we'll show it to there are 30 plus utilities that are part of our coalition now. So we'll show it to all of those CISOs to try to get a sense of how they would think about this as a potential customer of that product. And then, our sort of promise to them is we're going to go build a big company out of this and build a company that sort of caters to the needs that you have not only today, but in 2, 3, 4, 5 years. So that's how we think about investing more broadly at EIP. Obviously, if it's always hard to control the ultimate outcome. As investors, all the investors that invest in these startups have fiduciary duties to their investors to maximize the proceeds to the company. To their funds. So there's also that piece of the conflict that needs to be managed as well. But I will say, at the end of the day, it's always in the hands of the CEO. If the CEO thinks that he or she can build a really big independent business out of this, we're going to back that person and we're going to double down on them. And if the CEO thinks it's the right decision to sell, we'll tend to follow their guidance on that as well, because we always trust that the CEO has more information than us as a board or us as investors. So that's how we think about it. To the extent we think there's more runway and an opportunity, and they're leaving money on the table, or they're leaving opportunity to make an impact to our sector, that's the guidance we'll give them as well. So we sort of look at it through two lenses.
Okay. Well, we're here at Hack the Capital, so we've got a very, let's say, a government audience and people that support the government. So why don't we talk a little bit about some issues where the government impacts some of these companies? The most obvious one is regulation. There are NERC SIP cybersecurity regulations on the electric sector. There aren't a tremendous amount of regulations. There's a few by name, but actually the impact has been pretty minor. How do you, we'll start with you, Samir. How do you think the reality of regulation, such as the electric sector, or the specter of regulation, whether it be the presidential executive order or anything else, how do you think that the fact that there might be regulation coming affects these companies and the interest in the venture community in getting in? Is it a good thing, a bad thing, something else?
Yeah, that's obviously a really complicated question, but I'll say, from a couple of different perspectives. Number one, if you look at the actual asset owners, let's take utilities, for example. I mean, utilities are in a really challenging position where they have so many different stakeholders to manage. They have to manage shareholders who want to maximize profit, obviously. They have regulators, state regulators, federal regulators. They have customers, both commercial and residential customers, who want to minimize the impact on their rates. And then they have the reliability of the grid. So you have 4 or 5 different objectives, which are pretty complicated to manage. And all of those 4 or 5 constituents want different things when it comes to, or have different views on how much money a utility should spend on cybersecurity. So from my perspective, one of the things that regulation can do a really good job of is unlocking a lot of funding for utilities. There's some utilities, if you're a Southern Company or Xcel Energy, you're a pretty well capitalized utility. But if you're a smaller mid-market utility, a muni or a co-op that's adjacent to those utilities, they don't have the budgets. So there's a really strong opportunity for regulation to open up budget, enable these organizations, large utilities and small, to spend prudently, but make the right investments from a security perspective. So that's kind of point number one that I'll make. I think the second piece of it is, I think there are technical problems as well that the industry has sort of danced around probably for quite some time, and regulation can do a really good job of accelerating a solution to some of those technical problems. So take the executive order, NERC SIP 13. I think those are really good examples of what we're seeing right now in this broader supply chain security renaissance that seems to be happening right now. Previously, the view on supply chain security is all of these devices in the field are inherently secure, so let's manage our security programs around them. And I think right now, the thing that the executive order is doing, and ultimately we're gonna have to see how that actually gets adopted to see if that's, you know, a constructive thing or not. But it's at least forcing the conversation around what are the technical solutions you actually need to implement an executive order like that. Obviously, it's not practical to go and rip out every single transformer that has components from China, but it does force the conversation around how do you actually look inside of these devices and validate the integrity of all of these devices that are going onto the grid and all of these devices that are currently onto the grid. So I think those are the two lenses that I'll look at regulation through. Number one is creating new budget, and number two, kind of forcing difficult conversations and new solutions for the innovators out there.
Interesting. Bob, I'd like you to tackle the same question, and maybe as just a twist on it, we do have, as I mentioned, one regulation that's quite detailed and causes a lot of action to take place, the NERC-CIP regulations. That hasn't spawned a bunch of new companies that have grown large in size. As you answer that, is that something just because of when it came about? And if for example, we had similar regulations on oil and gas, it might be different this time?
Well, I think, you know, first of all, timing is you know, there's a lag, and part of what you have to, you know, I'm going to put my glass is not, you know, half empty but almost empty hat on first, which is the venture perspective as it looks at anything related to government. You know, the venture capital community's perspective is if we're dependent on government, that's a sector we don't want to be involved with. And it's not that government is not positive, it's just the government timelines and the government cycles tend to extend outside of a traditional venture funding cycle. So anything where you have a startup activity that's dependent on government activity, it tends to suffer in comparison with other opportunities. So, you know, if you look at the venture community saying, well, government's going to do all these things and it's going to revolutionize or transition an industry, people are going to look at that with a fair amount of skepticism just because of the timing involved. Remember, the venture ecosystem operates off 18 to 24 month cycles. And so companies basically need to show significant progress within an 18 to 24 month timeline in order to support their next round of financing. Well, when you get to government, things happen over much longer timelines. And so there's a you know, incongruity between those two timelines that tend to make the venture community skeptical of government impact on a venture-backed company. I'm going to flip that and say, in reality, when it comes to security, it's an area where government activity in terms of mandating security actually has a shaping function in the marketplace that forces capital to be allocated towards purchasing security solution. That is a net positive, a significant net positive, but there's going to be that lag. So I think that when you see, you know, the executive order, you see some of the other regulations coming along, it will have the impact of forcing industry to increase spend, you know, in cybersecurity solutions, and that will be a net positive from the venture community's perspective in terms of why do we invest in these types of companies. You know, we know there's a customer out there, we know they have budget, we know they have a requirement to deploy budget to increase their security posture. That's a net positive. You know, if you go back to what, 6 or 7 years ago, when the SEC put a rule in place that forced companies to disclose cyber breaches if they were material, that had a big forcing function on how industry responded to cybersecurity. For many years, you know, if there was a cybersecurity breach, it would be, yeah, it wasn't material. And it would kind of get swept under the carpet. That SEC rule forced companies to publicly disclose when there was a cyber breach. Now you got the usual arguments about what's the meaning of material, but it was transformative in the industry. And I think the regulations that are coming out today are going to have the same impact of basically encouraging the innovation ecosystem to deploy more capital to building solutions to secure this infrastructure. And let's be honest, if we are going to secure this infrastructure, those solutions are going to come from the innovation economy. They're going to come up from the startup community, you know, and so we have a vested interest in the venture community and the startup community developing confidence that this market is developing, that there will be capital available to procure solutions as they become available. If we can't instill that confidence and we can't unleash that creative capability around innovation, we are going to be at a significant competitive disadvantage.
Wow, there's a lot there. Samir, I want to give you a chance because I think this is maybe the most important question we're going to tackle. But Bob, you mentioned the SEC, and I'll just tell you that I've always thought that is potentially maybe where the biggest impact could be on getting privately owned critical infrastructure to do something, because that's something that the board and the executives know they're signing up for. And if they are starting to have to not just disclose breaches, but maybe even disclose whether their systems have a certain security rating, let's say it could drive cyber insurance, it could drive a lot of things as the SEC requires things. We've seen that in other areas. The downside is it tends to just get these boilerplate answers where everything is a risk, and you get some language in there that doesn't do much. Samir, I saw you listening to Bob. I want to give you a chance to respond to anything he said or add on to it.
Yeah, no, I think it's spot on a couple of fronts. I mean, one interesting anecdote I would say is from the CEOs and boards we talk to, they have no idea who their SIM provider is or who their EDR provider is. But when it comes to their ICS detection security solution, there's a lot of awareness. I mean, those companies are pitching to the boards of directors, the CEOs. It's getting that level of awareness because it's an incredibly strategic decision what vendor and what path they go down. So, and to the points that Bob made, I think there is C-suite liability at stake here. There's board level liability at stake for the first time ever. So that anytime you have those sort of dynamics from the top down, it's driving meaningful budget. So unquestionably, yes. And then the other piece I'll mention is the business benefits. It's sort of like the business benefits of cloud. It's kind of a no-brainer for many of these organizations to accelerate from on-prem to the cloud. Same is true for what's happening in Industry 4.0, where it's starting to make more and more sense for these organizations to digitize their legacy infrastructure. Like I know remote access is something a lot of people talk about. So it's really important for regulation to keep up with that, because the business folks are always going to want to do what's in the best interest for the business. And I think it's really critical for security regulation to keep up with some of those technologies.
Yeah, let me amplify something that Samir was touching on. I think one of the real risks, as the regulatory forces look at cybersecurity and as they look at it, whether it's critical infrastructure or more broadly, first of all, COVID has accelerated digitization by probably 5 years, out of necessity. And when you transition to a global digitized economy, the existential risk, the existential threat to that infrastructure is cyber, right? And so you've got a massive acceleration of the cyber pressures, related to the industries that we talk about. That has some really interesting implications for how government, provides leadership. And, government leadership should not be oxymorons in a case like this. A government has an essential role to play in terms of raising the bar with respect to expectations as it relates to security. The SEC, again, that we referenced was a great example of that. But the other thing that I think is government needs to be very, very careful about how it goes about establishing those standards. One of the issues when we were working on the SEC matter a number of years ago, that we came to the conclusion that government many times when it legislates or puts rules in place likes to be very, very specific. And the problem is if you put very specific rules in place for cybersecurity, game, set, match, you just lost. Because the nature of the cyber threat is very fluid. It changes daily. And so if you put a rigid set of regulatory frameworks in place, that before the ink is dry, they will be out of date and you'll be behind the curve. So I think government needs to take an approach where it holds people accountable for outcomes as opposed to telling them how to do it. Because how you do it will change on a day-to-day basis as the threat landscape changes on a day-to-day basis. And so if government needs to provide leadership, it needs to basically raise the bar of accountability and expectations from industry, but how it does that is as important as doing it. And that kind of that framework approach is something which is a little outside of how we typically have approached regulation. But it's something we're going to have to think about really hard, because hard and fast rules in cybersecurity doesn't work. The adversary is evolving all of the time. If you look at regulating financial markets, it's a lot easier to put rigid rules in place. You get to cybersecurity, very dynamic, always changing, never static. And so you've got to put a regulatory framework in place that understands that and says, okay, how do we achieve our outcomes in that kind of environment? And it requires you thinking about regulation from a very different perspective.
Well, there's two other areas where government is spending money on this sector and thinking about it, and not large amounts of money from a government perspective, but one area, Samir, is they are traditionally, and we got some of this money in the 2000s, DOE and DHS Science and Technology essentially does some early stage investing. So they will put out calls for research to develop a product or service, and they'll maybe initially fund it for $100,000, and oftentimes there's a second or third round in about the $1 million range. Is that a good use of government money to try to be an early stage investor?
I'll give my answer, and I'm curious to get Bob's too, given where Data Tribe's located. But I think I'd say it depends. If there is a critical technology that the venture community won't invest in, then I would say yes. So I think about, if you look in clean technology, there's some battery chemistries that VCs just won't touch, but I think can transform the way we think about the grid as it pertains to long duration storage and a lot of things that we're going to need to transition to this 100% renewable future. I think the same exists in security, but probably to a lesser extent. I think the bigger leap of faith is not can you build it? It's will the market come? So from a government perspective, I would like to see more dollars deployed towards customers actually spending money on the solution, because I think it's not the technical barrier that's hard for early stage VCs to get comfortable with. It's the fact that the market won't be there.
Any other thoughts, Bob?
Yeah, look, I think that's right on the money. I think it's you look at some of the stuff that Doug Mon did over at DHS with science and technology, I thought was really, really interesting. Areas where, there was either uncertainty over the commercial demand or uncertainty over the timing of commercial demand really affect how the venture community looks at prospective investments. And so where there are gaps, government stepping in and providing capital to, jumpstart innovation is I think is in fact useful. I think there are bigger issues around the market, correctly identified by Samir, where let me look at the electrical grid. Southern Company's a big company, very capable team. Tom's got a phenomenal technical team there. But you look at a lot of the electrical grid today. And some of the small co-ops and folks, like, they don't have those budgets, they don't have those resources, they don't have the expertise, yet they are vulnerable. So, what can government do to provide resources for security solutions to be deployed into that customer set, I think is really, really important. That goes back to both securing that critical infrastructure, but also catalyzing a market that will basically attract the attention of the innovation economy to build the solutions to protect that. So I think government has an important role on regulatory in terms of setting that bar high, but also facilitating, the market, if you will, so that the innovation economy fully engaged. I will tell you, the innovation economy can out-innovate faster, more efficiently than any government research and development lab. End of story. That doesn't mean government innovation isn't important. It's absolutely essential, important at the science level. But when you get to applied innovation, applied development, you want to harness the innovation economy to move fast and efficiently to build solutions to secure this infrastructure in the case of security. So my question then is how do we get government fully engaged in creating the market opportunity that attracts that innovation? And there, I think government plays an essential role.
It's funny, Bob, as you were talking about that, I can't remember if it was Doug Mon at DHS or Hank Kenchington at Department of Energy, but 10 years or so ago, he would say that they tried to fund things that were market failures. Essentially, there was no market, no one wanted to fund it, but they thought having that capability was important, and they did try to jumpstart that. Another area where the government's spending money, Bob, is, and an increasing amount, DHS's cyber group, CISA, their budget seems to be going up all the time. And one of the areas where they're spending money in the ICS world is essentially competing with private industry. So they are doing assessments, they are doing incident response. They're not selling product, but they're out there selling a lot of services. Not at the scale that could actually cover the entire company, but enough that could I guess, hurt a private company. Is that government spending of money competing against private industry a good thing, a bad thing, something in the middle? How do you look at that?
Well, I would say that long term it's not sustainable. You know, I mean, you've got to be careful, right? I mean, government stepping in to catalyze markets again is a useful thing. If that catalyzation goes towards building expertise, which helps inform regulatory frameworks, I think that's a helpful, probably a necessary exercise. To the extent that it competes with industry, and the industry as a result says, or this, what I'll call the innovation economy, the innovation economy says, well, I'm not going there because government's there and there's no opportunity, you're going to actually stifle innovation long term. So I think government catalyzing things to get the ball rolling is a good and positive thing. I think likewise, government needs to know when to step back and let industry take the leadership role, because it will accelerate if industry takes the leadership role. So I think, you know, if you're in government, you need to be very thoughtful about why am I doing it, and for how long do I do it, and when do I hand it over to industry? Because industry, again, will be faster and will be more efficient. And in cybersecurity, there are no rewards for second best or second place. You're either world class or you're out of the game, you know. And so you've got to figure out, how do you position industry to drive the innovation so that you've got world class capabilities. Now, you know, Samir raised a point that maybe I should have touched on. If you look at what we do at Data Tribe, we transition expertise out of the government, you know, into the industry, you know, in order to build cutting edge commercial cybersecurity defense systems. Now, that's an area where government and industry end up working out pretty well together, even though it's an informal relationship. You know, one of our observations was basically everything that we look at in the threat landscape today originated in an offensive playbook somewhere. Now, so one of our insights a number of years ago was, well, if that's the case and you want to build cutting edge defense, maybe you go with the guys that wrote those offensive playbooks and say, okay, I'm now putting you on defense. How do we stop sneaky bastards like you from having their way, you know, in the threat landscape world? And that's turned out to be a very, very effective strategy. You know, Silicon Valley, when you get to cybersecurity, from my perspective, is not the center of cutting edge innovation. If you want to know where cutting edge innovation is taking place in cybersecurity, you look at guys coming out of the national labs. You look at guys coming out of national intelligence who wrote those offensive playbooks. They are skating 5 to 7 years ahead of industry, which has a primarily defensive posture. So if you want to build next generation defense, you start with the guys that wrote the offensive playbooks. And those offensive playbooks came out of government labs. That's a really great example of government and industry starting to work together to transition cutting edge research capabilities, primarily offense, some deep data science expertise, into industry to build cutting edge defensive capabilities.
Yeah, and Dale, I want to dovetail that into something that we talked about earlier. I mean, Bob made the point earlier that, you know, there are going to be multiple multi-billion-dollar companies built in industrial security, and I couldn't agree with that more. I think when we talk about the possibility of government competing with industry or introducing any friction to a sector that, as we've discussed, already has a lot of hesitance from the venture community, I think we risk the ability of this industry to build those types of multi-billion-dollar companies. And I think if this industry is not successful in building those companies, I think we all have a bigger set of problems, because I think in order to solve a lot of these security solutions that we're talking about, I think it's going to require a lot of successful companies to emerge from the scenes. And I think in order to do that, it's going to take capital.
Well, interesting. I was going to ask you about something else, but this multi-billion-dollar companies really caught my attention, because I guess there's never evidence until it actually happens. But what we've seen to date would imply that most of the money's been in the detection space. Most of the venture being spent has been in the detection space. We're seeing very little interest in picking up other technologies. And if you do know of other areas you're looking, I'd be curious about those. And we're not seeing anything close to even $1 billion valuation, or let alone a $500 million valuation coming up. What and also everything we're seeing is large companies buying these out. So I could see like a Siemens, a Honeywell, an Emerson, a GE buying some of these companies out. We've seen security companies buying these out. What gives you some feeling that there's actually going to be some multiple billion-dollar companies that are going to be in this space, Samir?
Yeah, well, I mean, let me say two things. One, we're in the second inning of industrial security right now.
Yeah,
If we
okay.
look at the attack surface 3 years ago versus now, it's considerably different. I think Dragos is tracking something like 12 or 13 adversarial groups today versus probably 1 or 2 3 years ago. So the threat landscape's changing. IT security is becoming much more mature. So attackers are going to more vulnerable places. So I think we sort of have to follow the threats to some extent. That's sort of point number one. I think point number two, if you look at what happened in IT security, I think probably 30 years ago, people thought IT security would be 2 product categories, and then it quickly emerged into, we probably have like 50 or 60 now. So I think OT, what we're seeing in OT detection, this is just the tip of the iceberg. And I think this is sort of the basic block and tackling that every security organization needs to do. But I think it's going to be sort of the leading technologies that's going to uncover a lot of next generation technologies, whether it's, remote access or product security or, SDN for OT. I think there are going to be a lot of opportunities once we get through that. But that evolution is not going to be a 2-week evolution. It's going to take 10, 15 years.
Okay, and Bob, you wanted to jump in there. I could see you.
Yeah. Look, I totally agree with Samir. I think calling it the second inning is probably being optimistic. I think we're in the first inning. I got to say, when I was doing cybersecurity investing 20 years ago, people just thought I was paranoid. What's the big deal? And 20 years later, you got the fastest growing segment of information technology spend is cybersecurity. So there is a natural evolution. That evolution follows the learning curve, on the part of the customers. And for many years, industrial wasn't a primary target of cybersecurity. That's now changed, precisely to Samir's point. And so it's in the very early days. You've got a very steep learning curve on the part of the infrastructure operators, which you need to address. But the threat landscape, the consequences of the threat landscape, the value associated, creation or destruction with mitigating those threats is as significant and perhaps more significant than it is outside of any sector other than financial services. So all of that, if you look from a pattern recognition standpoint, says this is big, this is serious. We're in the very early days of the market coming to understand the risk and what to do about it. I've just got 20 years of history in security where I've seen this pattern before, and I said this is going to repeat one more time. And you always start off with the simple stuff, the detection, right? That's the low-hanging fruit. Those are the first companies that got started that have been exited, tend to focus on those areas. That's 5% of what this is about. Maybe it's 5% of what this is about. With respect to, we haven't seen big valuable companies yet. Again, it's very early days. I think in the near term, you'll probably see some changes on that, Dale, that you may say, okay, I see it happening. I think things that we're aware of, give us a lot of confidence that this market is developing, it is growing. People are understanding its importance. It's attracting capital. But also, if you look at, just looking at Dragos, looking at not knowing what COVID would mean for the pipeline. And what we've seen is activity that's off the hook. It's like, didn't see that coming. An acceleration of activity in the marketplace against a customer set that historically is very methodical, very deliberate, very slow moving, and it's accelerating. That's encouraging.
I want to try to get 2 quick questions in. Just the first one is a follow-up. So you both said it was early innings, second inning, even earlier than that. How many years till this market happens? Because Stuxnet was 10 years ago. So are we talking about another 10 years or 3 years? What do you think?
Well, I think you're going to see in the next 3 to 5 years, you're going to see a lot of value being created. Remember, you go back and you talk about Stuxnet, but Stuxnet was largely viewed as that was an intelligence operation that really didn't affect the rest of the industry, right? It's not, you know, I mean, the Russians going after the Ukrainians twice, some of the stuff that took place in Saudi Arabia, where all of a sudden commercial infrastructure is being compromised, really began, I think, to open up the aperture of people understanding how broad this threat landscape was and what the consequences would be.
Samir, what do you think in terms of a timeline?
Yeah, no, I agree with that. I mean, I think we're going to see a meaningful inflection in the next few years, but I think from that point onward, it's sort of indefinite. I think this fight and the adversary is this is never going to end. And I think just like IT security, we're going to continue to see new product categories developed and probably new problems and new threats. So I think in the next 3 years, we're going to see that inflection, but I expect to see a lot more product categories coming out of the next 10, 15 years.
Yep.
Okay. So we've got about 4 minutes left. Let's quick answers to this one. The one government thing we haven't talked about is FERC's investigating putting out incentives rather than just regulations to require you to do things, incentives that would involve rate increases and such if cybersecurity measures were put in place. Samir, good idea, something that will help?
Good idea with a caveat. I think it needs coordination from the state regulators. I think if you talk to a lot of utilities, anytime you're talking about FERC incentive rates, especially for vertically integrated, but also for T&D utilities that have a customer face, FERC only accounts for about 20% of their cost recovery. So I think for those utilities, the juice might not be worth the squeeze for them. When you take, there's no free money when it comes to the regulators. So I think that those FERC incentive rates are going to require more state coordination and more acceptance from the state PUCs in order to actually get adoption, unless you're kind of a pure transmission company where it's sort of a no-brainer.
Bob, do you have a quick comment on that?
Yeah, I would tend to agree. Look, I'm a carrot and stick guy. And so I think setting a regulatory framework that requires a level of investment or outcome is important. I think things that you can do to facilitate deployment of these security solutions, particularly those that maybe don't have the financial resources or may not have the technical sophistication, I think putting incentive programs in place to encourage and facilitate that investment is a good idea.
And then maybe we'll just finish off I mentioned that most of the investment has been in the detection space. Are there other spaces that you guys want to talk about that you're looking at, Bob, or is that something you keep close to the vest? Is there anything else you're looking at?
I tend not to encourage my competitors, too much, but I think, look, you have to, a lot of the industrial security stuff started with asset detection, logical thing to do. But the problem, you need to take a holistic approach to securing this infrastructure. Detection is just, asset discovery and detection is just the beginning. You need to be able to instrument the infrastructure. You've got to be able to operate that instrumented infrastructure. When Samir talks about, new categories, I mean, for example, think about, in IT, and the same thing's going to extend to OT, weaponization of data, for example. We spend a lot of time, today, let's secure our infrastructure, let's detect, let's defend, let's remediate, right? That all works well until data gets weaponized. Now you've opened up an entirely new threat landscape, and nobody's even begun to think about that. But that day is coming, because at some point in time, our infrastructure will be reasonably secure. The adversary is motivated by finding new ways to attack that infrastructure. They're phenomenally creative. They are ostensibly reasonably well financed, particularly at a nation state level, and the game just continues to change. And that goes back to Samir's point about we're going to be opening up entirely new categories. There's going to be entirely new threats that aren't even on the radar today that we're going to be contending with. And so the one broad category that I'll talk about that's IT and OT is weaponization of information, weaponization of data.
Samir, is there anything your utility partners are saying, hey, we got enough detection vendors, we need vendors making this sort of thing? Any area you're looking at?
Yeah, I mean, I think we touched on briefly around supply chain security and the impact of EO. So I think that's a huge one, is like, how do we actually look inside of these devices and validate the integrity of them? We've made a play there, but I think the other piece is, through COVID, one thing that's changed considerably is just reception towards remote access for ICS facilities. I think if you talk to any of the security practitioners within our group of LPs, I think their viewpoints on this topic pre and post COVID have changed dramatically, and I think the IT players are actually not well positioned to create a product here.
Okay, that's good. Bryson, I think we're at the end of our time. Should I stop talking to these gentlemen? Because I could ask them a lot more questions, but there he is.
Yeah, it's too bad that we're not able to give you more than an hour, but this has been a very informative discussion. So thank you, Dale, Samir, and Bob for that. And Twitter and all sorts of social media was lighting up with all sorts of different comments from highlighting the agreement with what you were pointing out. So, gentlemen, thank you.
Great, thanks, guys.
Thanks a lot, Bryson.
Thanks, guys. Thanks. Bye.